One thing that people do seem to be still going out and buying a lot of, it looks like, soda and snacks.
That much is for sure, and in true trademark form, PepsiCo is out with better than expected third quarter earnings results this morning. Growth was largely driven by another quarter of strong demand for beverages and snacks in emerging markets. The company did see slowing growth in its beverage business and called out it's dealing with volatile inflation just like many other large companies right now. And as we just highlighted here, PepsiCo Vice Chairman and CFO Hugh Johnston joins us for a deeper look into the quarter. Hugh, good to see you fresh off your earnings call. I was definitely on it, of course. Something really caught my attention here before we even get into the quarter. You came out here in I would say not trademark form, provided 2022 guidance saying that you are looking for growth in line with the long-term algorithm of the business. For investors not familiar with that algorithm, how fast do you see sales and profits growing next year, and why is that the case?
Yeah, happy to be with you, Brian. Good morning to everyone. Our long-term guidance on revenue has been mid-single-digit revenue growth and EPS high single-digit growth on a core constant currency basis. It is unusual for us. I think given the volatility, there were more questions out there than you would typically have at this time of year. Normally, we don't talk about the following year until February. But given just the sort of open questions that were out there because of all the volatility, we made a decision to provide investors with some clarity as best we can see it as we go into next year. So we do expect to see mid-single-digit revenue, high single-digit core constant currency EPS. And we think that'll be a terrific result, especially on top of what's been a really, really strong 2021.
Yeah, Hugh, I had to go run across my other room here to grab my pen. I did not expect to hear that from you guys here, but you also brought up too, and I suspect this plays somewhat of a role in your bullish outlook here. With consumers, you are seeing consumers essentially go into grocery stores and not showing much resistance to the price increases that you've put into the market. Why do you think that's the case?
Well, I think a variety of reasons, some of which are specific to us. We really have been investing heavily in our brands, and we've been investing heavily in innovation across really all of the various subcategories that we play in, snacks as well as beverages. And I think we're providing products that consumers are willing to pay more for. So, with the differentiation that we have and with the fact that our brands are as loved as they are, I think there is a willingness to pay more for those types of products. In addition to that, I think more broadly, consumers to some degree have been conditioned to price increases across a variety of categories. There's really no company that's immune to what's been happening in terms of commodity as well as operating expense inflation, and everyone's prices are going up a little bit. In a world where prices are increasing, again, on a relative basis, our prices are still somewhat low. And as a result of that, we're that simple treat or that simple pleasure that people choose to enjoy. And it's worth it to them to pay a little bit more for it. So the elasticity has been relatively low on these price increases, and I expect that'll be the case across 22 as well.
I want to pick up, Hugh, it's Julie here. I want to pick up on that last point in particular, because as you're talking about having more visibility into 2022, are you going to continue to be raising prices incrementally next year? Because as you know, this isn't just a question, of course, about Pepsi. It's a question about the U.S. economy and about the persistence of inflation. What can you tell us about that?
Yeah, it's a great question, Julie. Thanks for asking. So the way we've handled our price increases, we did increase prices a bit in the summer on the Gatorade business. The beverage business more broadly had some price increases in September across just about all of the product lines. And then the snack food business really increased prices in October. The way that we work in terms of our commodity inflation is we tend to buy about 6 to 9 months in advance. So by the time we get to February, we've got pretty good visibility into what the rest of the year looks like. My expectation is there'll probably be one more round of price increases in the first quarter as we sort of finalize what the cost outlook looks like. And we also get a better feel for what the consumer outlook is in 22.
And Hugh, can you drill down into that commodity inflation for us a little bit? As I was talking about, I don't know if you heard before your segment, we were talking about oil prices now in the U.S. pushing towards $80 a barrel. There are some forecasts that we could even get to $100 a barrel in the fourth quarter. Now, if you're buying 6 to 9 months in advance, that would put you out, beyond the first quarter next year with seeing potentially a significant increase again in commodities.
Yeah, so as I said, we are generally 6 to 9 months out. In addition to that, our commodity basket is pretty broad. There's no individual commodity that even makes up 10% of the basket, so we buy a pretty wide variety. It's tough to sort of pick one commodity and understand the impact on our overall basket. When it comes to what our expectations are for commodities in 22, we'll talk about all that in February when we have a better sense for it. But I do think we certainly expect some inflation based on the forward buying that we've done already into next year.
Hugh, lots of discussion on the earnings call this morning about your efforts with Hard Mountain Dew, your initial foray into the alcohol market. When does that drink, when will that hit the market? And then secondarily, you did note on the call that you have a pipeline of products here. So it sounds to me you're going to be making a broader push into the industry, right?
Well, as we noted on the call, it's a very big category. It's a category with lots of attractive characteristics, both financially and from a consumer perspective. And it's in an area that we're familiar with. We wanted to make sure that we had a partner that we felt like we could collaborate well and innovate well with, and Boston Beer is terrific in that regard. Dave Berwick, who is the CEO of Boston Beer, is a former PepsiCo executive. He understands his business and he understands what we do pretty well. So we kind of see this as a really interesting opportunity, and we're hoping it's a really big opportunity. So we'll see how it plays out over time. You'll see the first products in the first half of next year, and then we'll take it from there and see how big we can make it.
All right, fair enough. And also, too, we talked when you announced the sale of the Tropicana division. How do you plan to use those proceeds? And are there other parts of the business you're looking at for divesting?
No other plans to divest anything else. I'll clear that one right away. In terms of the use of proceeds, what we've said is, look, we're losing some EBITDA, so obviously we're going to pay down some debt as a result of that. In addition to that, given the growth in the company right now, we're going to invest in organic CapEx to help continue to facilitate the growth that we're experiencing. So those will be the primary use of proceeds.
I had to ask our Anjalee Khemlani to repeat it during the commercial break because it's an interesting and surprising piece of news. For the first time, a healthcare company is going to be headlining the Consumer Electronics Show, and Anjalee had the chance to speak to said health company and the head of it. Anjalee, tell us about it.
That's right, Julie. So the new CEO of Abbott Laboratories, who has taken over and just a year later is faced with this very interesting announcement, spoke to me in his first ever wide-ranging interview about taking the helm of the company in the middle of a pandemic, as well as what this really means, the significance of a healthcare company and what that means for the health tech sector largely. Listen to what he had to say and more.
Well, I'm really excited. Abbott's very excited to be able to deliver the keynote at the CES 2022, especially since it'll be a live event this year. And it's really important because we're the first healthcare company ever to deliver that keynote address. And I think it's very appropriate. I think it's very timely that a healthcare company does deliver that keynote. Obviously, for two reasons. One, we've been through this incredible experience with the COVID and the pandemic, and the importance of health is front and center for sure. But I also think it's important because of this convergence we're seeing between healthcare technology and digital technology coming together. That's a clear trend that's been occurring for the last at least 5-6 years that we've been seeing. So I think it's very timely and appropriate for us to be able to be part of this.
Absolutely. And that, of course, has come front and center really in the middle of the pandemic. So I want to ask you about that. Let's start with that first, which is you taking the helm of Abbott in the middle of the pandemic. We knew that you were going to be taking over well before, but the pandemic just sort of came in the middle. What was that like? What were some of the things that you sort of had conscious moments of that you couldn't believe were happening?
Well, I'd say, first of all, there was no playbook for this. So I think not only new CEOs like myself, but even very experienced CEOs, we were all kind of really having to make decisions with a new set of experiences and learning a lot as we made those decisions. But I would say for me, specifically for Abbott, I took over a company that was in really great shape. We had tremendous organic growth. We had a very rich pipeline, a lot of health technology that we were developing. So I took over a company that was in really great shape. I think another key aspect of that is mission and purpose. And that's so important today for me and obviously for all the Abbott employees. And to be at a healthcare company during a pandemic, it's almost like, okay, this is when your number is really being called. This is for moments that Abbott was built for. So I think that was very powerful for all of us to reconnect to our mission and our purpose. And I have a great team. We have a great, passionate group of employees and a team that's dedicated and committed. So while there wasn't any playbook, if you put all those kind of components together, it definitely made navigating a little bit easier, but there were definitely some challenges for sure.
I can imagine. I wonder, of course, being in the pandemic led to a lot of really interesting sort of changes in consumer behavior. One of those specifically being health tech. And I know that's something that really is a big part of the company, but let's focus on the product itself that really gave the attention to Abbott, and that's the BinaxNOW rapid test. Started off really helping support government efforts, and now they're on the shelves, they're accessible to everyone. And this is coming at a time where, we've seen this pivot from consumerism and at-home tests, which were sort of a niche market before. Do you feel like this is an area that Abbott can really capitalize on?
Well, for sure. I think we've long believed in the trend to decentralize some of the testing. It's not an either or, it's an and. So a lot of testing historically has been done in hospitals and labs. And what we see now with COVID is this trend to be able to add on a different type of testing, one that's a little bit more decentralized. That consumers can, go to a pharmacy, or they can go to a physician's office, airports and hotels, right? So there's this complete decentralization that I think is very positive for the entire diagnostic business. We also talk about the digitization of it, right? And we've seen a lot of that activity of medical devices with digital. And what you saw in COVID was Abbott's understanding of the importance of that digitization. So not only do we develop the Binax test, but we also developed a companion app called Navica that connects the test with your phone so that you can have your green pass to say, hey, I've tested and I've been tested negative. So I think that's an important aspect of it. And then the third piece, I would say, Anjalee, is this aspect of democratization. And it's a word that gets thrown out there, but we really, truly believe in that. So when we launched Binax, if you remember, a lot of the rapid tests were costing $100, $150 to get a test. And we went out and we launched it at $5 to really make it accessible and be able to build scale. So I think those three aspects, digitize, democratize, and decentralize, not only did you see that with COVID, but ultimately that's our vision. That's our view of how healthcare technology and digital technology will be able to come together.
Obviously, we've known and seen throughout the pandemic that health technology and devices generally accessible to consumers has really seen a huge growth. So it seems like Abbott is ready to capitalize on that. Back to you guys.
Anjalee, thanks so much for bringing us that conversation. Appreciate it.
Teens are loving makeup, wearing shoes from Crocs and Nike, eating goldfish in Nature Valley bars, and surfing around on Amazon and Netflix, a whole bunch. That is just a small sampling of the takeaways from Piper Sandler's latest Taking Stock with Teens survey. Piper Sandler Senior Research Analyst Erinn Murphy is here with more details. Erinn, always enjoy reading this report. 10,000 teens surveyed, so a large sampling size is always here. Anything surprise you here from the survey?
Yeah, well, thank you for having me on. There were a number of surprises this fall. I think what was important about this survey, though, is this is one of the first surveys that we've done for a couple of years that teens are going back to the classroom. So I think it does give some insights on what could a new normal look like. So 91% of teens were back in classroom in person, another 5% in a hybrid format. We did see a preference for specialty retail tick up. 30% of teen time is allocated to the mall or to specialty retail, which did surprise us. And we saw a lot more interest this fall in apparel, in footwear, and accessories. So we feel very strongly that we're in the midst of a multi-year replenishment cycle as it relates to the wardrobe. So I'd say those were some of the key takeaways on the positive side. On the slightly negative side, and again, maybe not too surprising because consumers are getting out and about again, but video game consumption ticked down. We also saw personal care preferences start to evolve more towards hair care, more towards fragrance, and away from cosmetics.
Erinn, I was surprised to see clothing is once again the top priority for teens, right? And you say in the survey, for the first time since fall of 2014, clothing, 22% of wallet share is number one. In case folks were wondering what it used to be, was food. Kids were going out and eating together, and it looks like they are spending more on clothing again. What are sort of the implications of that?
Sure. So I want to be clear, food is still very relevant, but it did tick down for the first time in 7 years below that of clothing. So I think as it relates to our coverage, I cover the apparel, footwear, and some of the beauty stocks for Piper. This is a very positive data point for apparel broadly. And so whether it's Nike taking new highs in our survey, whether it's Lululemon, again, we're in a casual cycle that hasn't come unwound just because we are moving through reopening. So we feel very firm about the casual apparel cycle that we're in. I think the other really fun anecdote is we talk to teens about what trends they're seeing in school. And we're seeing mentions of a lot of throwbacks to the 90s, whether it's mom jeans, whether it's high-waisted denim, looser, baggier fitted bottoms with crop tops. So there's a lot to be excited about that's new in apparel. And I think the consumer and the teen consumer in particular is excited to show it off.
Erinn, no way I'm going back and purchasing a few pair of Jinko jeans. I'm not reliving my 90s childhood and early 2000s. I'm not doing it. I refuse to. What is also interesting to me is that the survey pointed out 75% of teens are in households that have been vaccinated. That is up from 30% in the spring. As you look to the holiday shopping season, this has to be an incredibly bullish point.
Yeah, we do feel bullish on the consumer demand into holiday this year. We think that there's appetite, as we talked about, for apparel, for footwear, for accessories, which also jumped up 10% year over year in terms of interest. The one caveat, and I think this is important, is inventory. Obviously, our survey speaks to consumer demand, not to what's happening in the supply chain, but inventory is very lean across the board as several brands have had challenges getting their inventory to North America. So keep that in your kind of back of your mind. But from a demand perspective, we feel very good about what we're seeing this early on in the season.
I want to pick up on the inventory question because, of course, Nike is the big winner again. Nike is really perennially at or near the top in your survey. And as we know, Nike's got those inventory problems, right? It's having trouble with its factories in Vietnam. At what point do these kids get annoyed and try and turn to another brand, or does it just make Nike that much hotter for them?
It's a great question. I think the brand speaks for itself in our survey, hitting the top apparel brand again for 11 consecutive years, the number one footwear brand at 57% share, and even Converse, which Nike owns, picked up 300 basis points. So, I think the scarcity historically has driven the model. Clearly, if you can't find any product, that's a problem, but there's a lot of secondhand platforms out there. StockX was the number 3 preferred website for male teens. So there's a lot of interest in the brand that you may get not just from the primary market, but the secondary market, which I think is a positive. I'd say more importantly, obviously post the last quarter, we do believe that they appropriately cut their guidance for the balance of the year and really kind of took a scorched earth scenario to it. So from here, we do think this is a buying opportunity. We think the supply chain, while pressured right now, will be transient. And the fact that this brand time and time again hits the top of this Gen Z demographic is the more relevant point here.
Erinn, I have 60 seconds left and 2 questions for you, so I have to be quick here. 9% of teens in the survey claim to have traded crypto. What do you make of that?
These teens are digital. They are figuring things out. I think of that 9%, close to 80% were male. So it will be interesting to see how this changes going forward. The other really interesting stat was on NFT. So there was a similar kind of high single digit interest of more teen male purchasing NFTs. So a whole new set of kind of asset classes are emerging for this young generation.
And Erinn, lastly, this is blowing up on my Twitter feed. I tweeted it out there. Why the popularity in goldfish?
My goodness, that's a great question for Michael Lavery, who covers it. But teens like to snack. I think they've been sitting at home for the last 18 months. And, it is a top trend. But more on that later. We'll have to dig into if it's more of a TikTok trend. I would say that seems to be the golden wand that flashes across our survey and makes things move higher.
Always awesome work here. For the record, I am not a goldfish fan. Piper Sandler Senior Research Analyst Erinn Murphy. Good stuff as always.
Let's bring in somebody who's very familiar with the platform. We've got Matt Peralt, University of North Carolina at Chapel Hill, Director of the Center on Technology Policy. Matt's also a former policy director at Facebook. Matt, let me just get your response to what has transpired here with your former employer, Frances Haugen, as Jared said, a very credible whistleblower who has been out front in calling Facebook on what she says are misleading statements that have come out with the understanding of the impact the platform had, especially on young kids.
Thanks so much, Akiko. It certainly is bold and courageous for Frances Haugen to come forward the way that she did. And I also would like to applaud the reporting that the Wall Street Journal has done. Those reporters have a tremendous amount of integrity. They're incredibly impressive journalists. I do think the issue here is a very complicated one, though. The research that came to light didn't just show that Instagram had a negative effect on teens and their own self-image. It actually showed that a significant number of people who are on the platform, for them, it actually has no effect. And then for about 40%, the data showed that it actually has a positive effect. So I think the question then becomes not just how do you address the harm, but what are the trade-offs between the good the product does in the world and the bad the product does in the world? For that reason, I'm not sure that tobacco is necessarily the best analogy, because something like warning labels, for instance, on tobacco products, I'm not sure what the downside is of that. But if you were to constrain expression on Instagram, you would be getting rid of, presumably, the problems, and that would be a good thing. But you might also be getting rid of the benefits, and that would be a bad thing. I think those are really difficult questions.
Yeah, and let me follow up on something Akiko said and just get back to this flawed big tobacco analogy that we keep referencing. Akiko said that there were all kinds of outside experts that had evidence about what tobacco was doing to people. And in this case, Facebook is such a closed book that nobody really knows what's going on. In fact, that was a big part of our impetus for coming forward, that nobody else knows what's happening inside Facebook. Part of this gets down to social governance issues in the company. That I think there were some things put before the board or the shareholders in May that were trying to remove a little bit of Mark Zuckerberg's super voting power. But what do you see as potential solutions here to the fact that Facebook is, in fact, such a closed and black book here?
So I actually have a different view of the main issue going on. I think there's a lot of transparency about what happens at Facebook. There are leaks almost on a daily basis from senior level decision-making meetings at the company about what's going on. I think there's a tremendous amount of transparency. And I think that actually is a challenge for internal decision-making at Facebook. If you're a Facebook employee and you want to raise a controversial view in a meeting, I think it's very difficult to do that right now with the assurance that what you say in a meeting is not going to become public. There's just a tremendous amount of leaking. Now, is it the case that researcher access to data, the regimes governing whether researchers like me in my capacity now at UNC would be able to have access to data? That process is unbelievably broken. Tech companies, I think, are concerned about the risk that they might face when they disclose data to researchers. And researchers are concerned that they might get retribution from companies if they mishandle the data in some way. So that's an issue that we really need Congress to fix. We need a better regime for researcher access to data so these issues can be studied more effectively than they have been to date.
Matt, it feels like there's a larger question here about to what extent Mark Zuckerberg as well as Sheryl Sandberg are aware of what's happening on the platform, whether in fact he knows that some of the algorithms Frances Haugen's talked about does in fact incite a lot of emotion, anger in many cases, whether in fact he knows some of the disinformation, misinformation that's happening on the platform. How much of the problems she's addressing, you think, has to do with just the fact that the company has become so big?
So Facebook is a user-generated content platform. That makes it different from traditional media companies. You can easily share information on Facebook, whereas with traditional media companies, you need to get their permission before they publish information. That makes it fundamentally different. And it means that user-generated content platforms will have a range of different types of content, including content that you and I might find to be objectionable, or even content that might be harmful. I think Facebook is very aware of that issue, and they try to address it, but the fundamental nature of a content platform that's a user-generated content platform in which people can share information freely is that there will be problematic information. I think given the nature of the product, what we need here is for Congress to not just hold hearings, to not just make statements about the problem, but to actually outline what the rules should be in areas like online content. And I think it will be impossible for them to make rules that don't have really significant consequences. We might want there to be less sharing on platforms like Instagram because we have concerns about some of the harm that might be associated with some of the content that's shared. But if we make those decisions and government takes a much more restrictive approach to speech on platforms, we will lose a lot of the benefits too. I think it's best for those decisions to not necessarily just be made by CEOs like Mark Zuckerberg or CEOs of other major tech platforms, but for those decisions to be made by Congress. And so we really need to see Congress step up.
Matt, there is a larger question about just, to what extent this is going to impact the growth of Facebook and the growth that we've seen on platforms. And I want to see if we can pull up this Piper Sandler survey that came out that points to the platforms teens are using today, the social media platforms for teens are the favorite ones. Snapchat coming at the very top, 35%, TikTok at 30%, Instagram at 22%. I mean, we're talking about Instagram trying to increase engagement on their platform as well. But if you talk about those levers that needed to be added in here, if we're talking about the safety of the platform, how much of that do you think comes at the expense of growth?
I think it's really hard to make that determination, but I think what you see in that slide is a really important dynamic in the tech sector right now, which is there's aggressive competition for tech platforms for many different audiences, including teen audiences. And that means that all those different platforms can offer different competing value propositions to their users about what would make them most effective, what would create the most valuable user experience. I think that's a really important dynamic that's going to hopefully lead to better and better products. If Congress sees examples of market failure, like cases where that competition is producing negative effects on society, and those effects aren't properly borne by the companies themselves, then that's an area where regulation would be really productive, and Congress can play a role in shaping the nature of that competition.
I want to read you a quote. There's a really interesting discussion going on right now at the hearing, and this is what Hagen just had to say about engagement-based ranking. Dangers of engagement-based ranking are that Facebook knows the content that elicits an extreme reaction from you is more likely to get a click, a comment, or a reshare, and saying, I've spent most of my career working on systems like engagement-based ranking. When I come to you and say these things, I'm basically damning 10 years of my own work. And then she gets into some of the possible solutions, saying that Section 230 should be amended to make Facebook responsible for their engagement-based rankings. I'm wondering what your thoughts are on this discussion.
So I think amending Section 230 is likely to actually be very positive for companies like Facebook. Changing Section 230 is going to entrench large tech companies that can spend an immense amount of money and devote an immense number of employees to moderating content on their platforms. Section 230 actually means that platforms don't need to devote as many resources to content moderation and to compliance costs. And that actually makes it possible for a range of different platforms, including smaller platforms, to survive. So I think keeping the core components of Section 230 in place are really important, although Congress could certainly legislate in key areas, like Congress could modernize law on incitement to riot, for instance, or Congress could pass a law criminalizing voter suppression, which doesn't currently exist at the federal level. So even with Section 230 in place, there's still an important role for Congress to play.
Matt Peralt, appreciate you hopping on. Always good to get your insight. He's the University of North Carolina at Chapel Hill Director of the Center of Technology Policy, and of course, former Facebook Policy Director as well. Well, Microsoft is rolling out its first major upgrade in 6 years. Windows 11 features a new user interface along with built-in Teams video chat, among other additional features. Let's bring in Yusuf Mehdi. He is Microsoft Corporate Vice President, Modern Life, Search, and Devices. And Yusuf, it's great to talk to you. We've got Dan Howley joining in on the conversation as well. Yusuf, we've talked so much about how over the course of this last year, the way in which we work has changed so much. And it feels like this version of Windows has incorporated a lot of those features. Talk to me about how the user experience is going to change with this upgrade.
Absolutely. Well, first off, I'm going to say I'm so excited to be here with you guys. Today's really the start of, we see it, a new era for the PC, brought in by Windows 11 and defined by a more personal experience, more apps and devices, and a new, more open platform for creators and developers. And the big changes to your question of what we've learned over the last year is a couple things. One, in a world where life interrupts work and work interrupts life, we need a calmer, more sort of serene experience. And the new user experience on Windows 11 with the centered taskbar, rounded corners on the windows gives you that sense of calm. Second thing is we've really brought the ability to do, video calls, which is a big part of how we live our lives, how we teach our kids, how we work remotely. We've done a lot of tuning, and we even put a link right on the taskbar so you can one-click text message. And finally, we put a lot of things in it to empower your productivity and inspire your creativity, whether it's the new Snap features, whether it's the new widgets that give you a personalized news feed, a bunch of new capabilities that really help you empower you in your daily life.
Yusuf, this is Dan. Obviously, I think the most visible change is the start button moving from left to center. I know that's gotten some, we'll say, mixed reactions from some users. I happen to like it. I think the start button looks better there, and it's easier to access for touch. I guess, just from a basic standpoint of this question, why was that decision made? And I guess, is that integral to Windows 11? Is that something that you guys were trying to change to give it a fresher look, or was it something that was more important than that?
Well, a big thing, for us, Dan, is really the focus on having that, really sort of centered, calm experience in Windows. We did a lot of research. We talked to lots and lots of people, and that putting that taskbar at the center, simplifying the experience, that's a big thing that we've seen. And we see it in, you get almost an emotional human reaction to it. And we think that inspires people's creativity. But to your point, look, if even 1% of people, say that, hey, those changes are something I'm not used to. For us, with 1 billion users that use Windows 11, Windows 10 every day, that's 10 million people. So there's definitely going to be feedback, but so far the feedback has been very positive on it.
And I just want to focus on games real quick. Obviously we have Teams chat in there, trying to get that more front and center with consumers. But one of the big things that I think is interesting is that you've included the Xbox app now in Windows 11, and you talk a lot about, or Microsoft talks a lot in its documentation about how gaming is basically integral to Windows 11. Why was that decision made? Why is Microsoft leaning more into games than Windows 10 or prior? Because it's not as though gaming wasn't important to prior generations of Windows. It's the biggest gaming platform in the world.
Yeah, I think you said it spot on. The big thing for us is that, gaming has really been the fastest growing form of entertainment of anything, TV, music, video. And we want to continue to do the best job we can with Windows 11. And so some of the improvements there really kind of speak to what people need now. Faster game loading time, better graphics resolution. And through the new Xbox Game Pass app, we now let you stream apps directly from the cloud and let you easily find the apps you care about. So it's really about unlocking that next form of entertainment, the most popular form of entertainment on Windows.
Yusuf, Dan mentioned the start button. You've got the new taskbar as well. That's drawn a lot of comparisons to Apple's Mac OS. And I know as a Mac user, I saw the new features on Windows and thought, well, this feels a lot more intuitive, sort of doesn't feel like so different between past Windows and then having to use Apple's OS. And I wonder what the thinking is inside the company. How many users do you think you can actually migrate over now that Windows is or has become much more open over the years?
Yeah, so I think we're really excited. I mean, as you probably know, we have over 1 billion people who use Windows on a regular basis. And, I think over the next couple of months, our goal is to, upgrade as many people as seamlessly possible on Windows 10. And of course, the best way to get access to Windows 11 is to buy it on a new PC, because then you can take advantage of all of the new hardware for security, for better, mics and better, graphics. And so we see that capability out there, and we think that will be a great way to enjoy the experience. And a big part for us is really, as we help people be more productive in their lives, that new sort of centered experience we've got, plus new capabilities like the ability to snap windows and have multiple desktops, things we had in the past, but we didn't make as simple. Now they're really simple with Windows 11.
I want to get back to our original discussion, talking about some of the behavioral changes that happened with the pandemic. I'm just wondering, from Windows 10 to Windows 11, what did you drop as features, or say, well, we don't really need to go in that direction anymore?
That's a great question, because there's so much detail in Windows. I think it's less about what things we dropped and more about what things we emphasized. And so, the first thing is we emphasize simplicity. And so we did try and remove a lot of the complexity of the user experience. We tried to improve the start button to have a simpler layout, make that more programmable from the cloud so that it can be updated. Second thing is we have an all new store that has a bunch of capabilities. So now you get the widest array of apps. We've always had the best set of apps on Windows, but now you can actually have Android apps. So in the past, when you've been using your PC and you're in the zone, if you will, being productive, you might have to stop and look to your phone to, order an Uber or to get some food from DoorDash. No longer. Now you can just do that right on your PC. You can even send text messages right off your PC. So those are some of the things we've tried to amplify. At the same time, we've tried to make the experience simpler for people by hiding some of the more complex things that people don't need to, use on an everyday basis.
Yusuf, I have a question about Android apps. I know that they're not available out of the box with Windows 11, but they're coming to the Microsoft Store, the App Store that's part of Windows. Is there a timeline as to when that will be available, and why did you want to bring Android apps to Windows?
Well, let me start with the second part of your question first. Our goal is to really empower people to be productive on Windows. We want to give people the widest choice of apps possible. And so we thought bringing Android apps is sort of a no-brainer onto Windows now, because as I mentioned, a lot of times, for most of us, we're using our computer to be productive, and then we get interrupted by a phone, a text message, or a notification. And then the next, you're competing on your phone when you have the PC right there, which is a much better form factor because you have the screen and the keyboard and the mouse. So by having the Android apps right on Windows, you're able to have that experience. You're able to be more productive and stay in your flow. That was really the big focus for us.
And then just as a final, I want to ask about people who are upgrading from current PCs. I have my own desktop that I built because I'm a huge dork. But when you go to install it, there are some back-end issues that you have to clean up, mostly about it's the trusted chip to ensure better security for Windows 11, which is a great feature compared to prior generations of Windows. But it's also something that you have to go deep into system settings. Now, for less tech-savvy people, that may be kind of a roadblock for them in installing the software. Is that going to become easier over time? And I guess, how does Microsoft expect those people to really upgrade if they have that issue?
Yeah, there's a lot in there, and clearly you're more tech savvy than the average person. So let me hit a couple points just to the comments. First, we did make the bet to take advantage of the latest hardware that's out there on the market to improve security. So we have chip to cloud security in Windows 11, which gives you that next level, of capabilities. We wanted to give you, better gameplay. We wanted to give you better camera and mics because you're doing Zoom calls or Teams calls. So we made that bet. At the same time, we do want to be able to upgrade PCs. And so the goal that we've set for ourselves is that of PCs sold in the last 3 to 4 years, the vast majority are going to upgrade. And we're going to make that easy for people. So you don't have to go out and find it. We'll notify you when the time is ready. And we're going to have a great app, a PC, check app that will check your PC to tell you if it's eligible for upgrade. And if so, then we'll make that simple for you. And if not, then you can always stay on Windows 10. We're going to continue to upgrade that for the next 5 years. And of course, what I would recommend is you get a new PC. There's never been a better time to buy a new PC than with Windows 11.
Well, as somebody who is in the market for a brand new PC, I might put off that decision for a few weeks and get Windows 11 installed. Yusuf Mehdi, thank you for joining us today. Microsoft Corporate Vice President, Modern Life, Search and Devices. Welcome back to Yahoo Finance. I'm Jared Blikre. The U.S. trade deficit came in at $73.3 billion. That was a deficit for the month of August, a bit wider than the Street expected. We want to talk about all things trade here, and for that, we're going to bring in Gary Locke, the former Secretary of Commerce under President Obama, also former U.S. Ambassador to China, also former Washington governor. Thank you for joining us. We just got some statements from the Biden administration, really just continuing the push and kind of, it was a very strongly worded statement against China, saying that they're going to continue the outline of the agreements, the phase one agreements enacted under the Trump administration. It doesn't seem like things are thawing here. I'm just wondering what your take on the situation is.
Well, I think the Biden administration is really looking for concrete actions by China in response to the deep-seated concerns that not just American companies and government officials have, but companies and governments around the world. China has a very discriminatory trade policies, not living up to its commitments under the WTO, not sufficient protections of intellectual property, not a strong rule of law, and really subsidizing many of their industries, which are contrary to world rules and contrary to the agreements they made when they joined the WTO. So the Biden administration still is waiting for concrete steps by China addressing these concerns and really living up to the agreement made with President Trump.
You know, those comments certainly really echoed by current trade representative Catherine Tai yesterday, where, you know, she said essentially this isn't about decoupling, it's about what are the conditions for recoupling and what are the pressures that can be placed on China to at least meet its commitments that were laid out in the phase one agreement. I mean, what do you think should be the conditions, and how does this deadlock, how do you resolve this deadlock?
Well, first of all, while the concerns of the American government and American companies are legitimate, I do think that the Trump administration made a serious error when they imposed these tariffs on Chinese goods coming into America, and then China retaliated with tariffs, which is really a surcharge on the cost of goods. And they imposed the retaliatory tariffs on American goods going into China. That has really hurt the American consumer, American workers, and American companies, because the cost of American goods are now much more expensive in China, which really puts the products from other countries, whether it's Europe, Canada, Latin America, elsewhere, at a competitive advantage, hurting American companies, American workers. At the same time, American consumers are paying much more for Chinese products, whether it's clothes, shoes, sporting goods, tools, you name it. And that's hurting the American household. The Wall Street Journal, the New York Fed has estimated that the impact of these American tariffs on Chinese goods has cost the average American family about $800 extra per year. What would have been better would have been for the United States to join with other countries in a multilateral, collaborative, multi-pronged approach against China, instead of the United States doing it alone. Because while the other countries are rooting for us to win and to prevail and to have China modify their trade practices, they're benefiting during this trade war.
Secretary, that was exactly my follow-up here, because we've seen China now apply to get into the CPTPP. Of course, you served under an administration that was all about the pivot to Asia, and yet the U.S. isn't a part of what is one of the largest regional trade pacts. How much of that do you think weakens the U.S. hand when it comes to trying to resolve some of these differences on trade?
Well, I think it was most unfortunate that we did not ratify the TPP, the Trans-Pacific Partnership, which was put together under the organized and led by the United States. And it's a multi-country trade agreement, an advanced trade agreement that sets very high standards for health and human safety for its workers, in protection for the environment. It really addresses many of the complaints that American workers, labor groups, environmentalists, and American companies have with respect to these trade agreements that we have all across the world. And this would have set such a high bar that, in fact, China was not willing to join because it could not have met these conditions. What's happened is that tariffs for all the other participating countries, whether it's Canada, have now been lowered so that they can now sell their goods, let's say, into Vietnam and these and other parts of the world in Southeast Asia, the countries that are part of the TPP, at lesser costs than American products. And so not joining the TPP has really hurt American workers and American companies. And at the same time as it's setting a very high bar, addressing the complaints that American companies and American labor officials have long had about our trade agreements. So it was most unfortunate that we were trying to address their concerns and we did not join in.
I want to ask you, shift gears a little bit to the developing energy situation and crisis that's going on in China, and for that matter, throughout various parts of the world. Any measures with respect to trade that can alleviate, or anything that you think is being done right now by some of the authorities that is hampering the situation over there?
Well, the power situation is worldwide, and it's affecting oil and gas, coal. There are export restrictions by many of the countries in terms of the exporting of coal. China itself is trying to cut down on the use of coal because of the carbon emissions, but also just the pollutants in the air are really hurting and prematurely killing millions of Chinese people every single year. China is trying to reduce its dependence on coal, but they also need the coal to produce electricity, to power their factories, and to heat homes and to provide energy for daily use. So it's a really bad situation, because what's happening is that as these factories are operating on less hours because of the restriction on electricity, because of the lack of power supply, including coal, then you're actually having fewer products made, which then affects the supply chain for all things all around the world, including consumer goods, but also components. And so it really is the supply chain problems that we're seeing throughout the world, whether it's chips, whether it's not having container ships coming in, or not having container ships in the right, or containers in the right locations around the world. We're in for quite a supply mess.
Secretary, let's talk about what's playing out at the WTO as it relates to intellectual property rights. There's been this proposal on the table to waive TRIPS, which stands for Trade-Related Intellectual Property Rights. The thinking here, of course, is that if you waive that, particularly as it relates to the COVID-19 vaccine, it would accelerate the distribution, especially in developing countries. I mean, how much do you think of when we look at where things are in the pandemic, how much of that is contingent on getting that kind of waiver in place? We've seen holdouts like Switzerland who have a strong presence in the pharmaceutical space.
Well, I think it sounds good, waiving the intellectual property protections of all the pharmaceutical companies that are involved in the, this groundbreaking new technology to fight COVID and to provide the vaccines. But it really will do absolutely nothing. We need vaccinations. We need the vaccines into the arms of people right now. We need all the manufacturing capability ramped up, going 24/7 with additional lines of manufacturing right now. The Biden administration has pledged to donate 1.1 billion doses of the vaccine by the end of the year. We actually need 11 billion doses worldwide. And so we really need all the other countries around the world, the advanced industrialized countries, to donate, to help pay for the vaccines and to get them into the arms of people. India and South Africa were the leading proponents in asking for the waiver of these intellectual property protections, but they're already producing the vaccines. And in fact, they've been in some ways not allowing the distribution or the sharing of these vaccines to other countries that really need them. Why do they want the waiver or the getting rid of these intellectual property protections? It's not because they want to produce more COVID vaccines. They're doing that now. What they really want is to understand the technology so that they can start working on cures for other diseases. And China would benefit from having these intellectual property protections waived so that they can develop new vaccines for other diseases and use the technology to address other cures, and then share those medicines around the world as they try to get other countries to align themselves and to support the policies of China. What we really need is to get vaccines distributed, and even countries in Africa that have been given the vaccines have had to turn them back because they don't have the way to store it. They don't have people to inject it. And so we really need to ramp up current production.
Yeah, I mean, certainly any solution that leads to more shots in the arms of people, welcome, especially given the inequality that we've seen between advanced countries and developing countries. Gary Locke, it's always good to have you on, former Secretary of Commerce under President Obama, also the former U.S. Ambassador to China and the former Washington governor.